Good afternoon, ladies and gentlemen, and welcome to today's webinar titled Tariffs and Turmoil, How Trade Wars Are Reshaping Global Financial Markets. Uh, we are very excited to be here today. First of all, customary an introduction of our hosts of today. Uh, we have Financial Markets Association of Pakistan and Tresmark to thank for this session that holding for us today. Tresmark is a leading fintech platform specializing in real-time OTC market intelligence for financial institutions and corporate treasuries. With the global economic landscape evolving, Tresmark continues to explore innovative solutions for market participants. By the way, their updates on the currency and all that with a bit of wit is absolutely fantastic. Uh, FMA Pakistan, normally known, Financial Markets Association is on the forefront of promoting financial market development, knowledge sharing, and best practices among the market professionals. So I believe together, Trustmark and FMA have created this a wonderful platform to foster insightful discussions on key financial and economic matters which affect all of us in Pakistan and abroad, especially within Pakistan. Moving on, a brief introduction of our distinguished panelists today, and I'm personally very happy to have Mr. Saqib Shirani and Habib Paracha with us today. A brief introduction of Mr. Shirani. Mr. Shirani is a prominent Pakistani economist and former principal economic advisor to the Ministry of Finance. Mr. Shirani has extensive experience in public policy, corporate management, and financial services. He's the founder and chief executive of Macroeconomic Insights Private Limited, a consultancy firm based in Islamabad. Uh, the first economic research house established in 2011. Mr. Shirani has extensive work, which includes one of them is the Economic Survey of Pakistan, which is the flagship publication on the state of economy within Pakistan. Moving on to Mr. Habib Paracha. Mr. Habib Paracha is a prominent Pakistani entrepreneur and executive recognized for his leadership roles across multiple industries, including finance, agriculture, mining, media, and energy. He's the co-founder and chairman of Blinq, a B2B fintech company, and the founder and CEO of Centurion Entertainment. Mr. Paracha is a graduate of Boston University's Question School of Business. As a private investor in innovative ventures, he has played key roles in driving growth and strategic development across multiple disciplines and multiple industries. Now, with the further ado, coming to the session, just a brief introduction for the participants. We'll be holding online polls during our sessions also. This would be divided roughly into three segments or four segments of 10 minutes each. So on the prompt, whatever the main topics, I'll invite each of you gentlemen to uh, come to the forum. So starting with the subject, the first 100 days of Trump has been nothing but interesting, filled with turmoil, turbulence for the whole world. Started with Canada and Mexico down to China and the whole of the 189 or so odd countries, including an island where there are only penguins and seals, I believe. So they've slapped tariffs. So there's a whole turmoil around that. How insulated are we or not? And what is the impact that is going to be on all on throughout the global financial market, especially within Pakistan. So that is something that we will be talking about. So the key impacts, as I understand, of the trade wars on global financial market would first of all be market uncertainty and volatility. There is and will be further disruption in trade flows and supply chain. We used to talk about supply chain management and just-in-time inventory. I think that is pretty much out of the window at this point in time. The way US is thinking of recalibrating its industry, especially the auto and some other sectors, the inflationary pressure and price distortion, especially the effect on the consumers, as is normally said, that what Trump really is going for is making money for the government, charging other countries and companies, but actually their own consumers are going to pay for it. So at one end, what they're going to get, they're probably talking about some tax cuts, which people say is only for the uber rich. and not for the masses. So that is another one thing to keep in mind, that's going to lead to further inflation and possibly depression. And the retaliatory measures and escalation that has been taken by the country. So, what are the risks associated with that? Then we move on to the sector-specific impacts. We've seen that impact on the tech industry, especially the hardware side of that, and the mining, the rare earth, and microchips. We have all seen that, and the fragmentation of the financial system. We're talking about uh, possibly the US dollar losing its thing as the international medium of exchange. So, coming to that uh, impact, I would first want to ask Shirani Saab, giving your work with policymakers and multinationals, how should companies interpret the current tariff wave? Is it territorial or is it transitory or structural in nature?
Right. Kazmi sir, with your permission, first, thank you. Thank you for inviting us to this. Thank you to Financial Markets Association as well and to Tresmark. But with your permission, Kazmi sir, I have a few slides I want to show, and that addresses some of the potentially
Please, please,
questions
please,
that you
please.
have. Yeah.
Sure, sir.
So, right. Thank you. I mean, as you can tell from the title, it's going to be a bit. So, if you just go to the title, please, to the first slide, the title slide. Yeah, this one. Yeah, thank you. So, obviously, you've talked about, de-dollarization, but I think it's obviously, it's not just decoupling with China, it's a de-globalization strategy or maybe end game. And then the consequence of that, an unintended consequence, could be de-dollarization. So we'll talk about these three things very quickly, and that answers the question that you've asked as well. So next slide, please. Yeah. So if you could move to the next slide, Ikra. Yeah. So obviously there are more questions and answers, and one of them is the one that you just asked, Kazmi Saab. Is this transactional? Is this a strategic negotiating masterstroke? Or is this much more aligned and congruent with the internal belief and value systems of the 𝗲𝗲𝗀𝗀 sort of tribe that's now in charge in the US? So next slide. My view on this is quite clear. I think I give credit to President Trump that his stated preference is actually quite close to his revealed preference, or
Yeah.
maybe I should say it the other way around. The real preference is much close to his stated preference, because he's fundamentally a nativist, unilateralist, quite likely an imperialist at heart, anti-multilateral, anti-globalization, and anti-China, clearly. So he's brought all this to the table. And the reason I say this is because what he has done is extending far beyond trade, right? It's extending to his approach to academia, to immigration, to international borders, to the international order, to spheres of influence, and even to his alliances as well. So next,
Yes, to friends and foes alike, as they say.
absolutely. So the thing is, even if this was transactional, we are very unlikely to see a global reset. The world is not going to settle back to April 1st, even if President Trump extends the pause or does these fantastic, phenomenal trade deals he's hoping to do. The world has changed. Now, there's a period of disruption, volatility, and uncertainty upon us. And fundamentally, what has been unleashed is not going to be a win win for anyone. It's going to be a lose lose situation for the entire world, because
Right.
beggar thy neighbor policies have never worked, for anyone. And this time around, the situation is far worse because global trade and interconnectedness of the world is far larger. So the network effects are going to be much bigger than in the past. Next. And what we've seen in the past, I think it's really important to to zoom out and take a historic view. Trade wars have always almost invariably been followed by currency wars. and then quite often by shooting wars as well. So there's going to be a period of global tension, a period of global geoeconomic fragmentation, back to the Cold War spheres of influence. And then, one important lesson that's sort of, been reiterated by an economic historian in a foreign policy magazine article a few days ago, that there have been about four economic depressions in the US since 1817. And of these four, three have been caused by protectionism in the US. So, this is, I think, an important lesson as we reflect on what the consequences of this could be for the US. Next. Yeah, the next slide, please. Yeah. So for Pakistan, obviously I'm summarizing a larger presentation to fit into the 7 to 10 minutes that we have. But for Pakistan, I think one mistake that we sort of have made so far is that we've looked at, what is likely to happen to our exports in the US. And this is obviously a partial equilibrium analysis because all of Pakistan's export markets will be affected, right? So we need to look at it, we need to zoom out and look at all the major export markets, and all of them will be affected, and all of them are likely to be affected in a negative manner. So the fallout will also be beyond trade. It's not just our exports, but it's our, on the positive side, the cost of our imports, potentially our remittances, our investment flows. I think a really underappreciated element is the access to international capital, both the access and the cost of international capital, because this is going to be, the it's very likely that the US actions, one of the unintended consequences will be that there'll be a tightening of financial conditions, not just for the US, but for all external capital dependent countries like Pakistan as well. Right. So next slide. So in my view, Pakistan is poorly positioned to absorb the full impact. It has weak macro fundamentals, as we know, but even the industry micro fundamentals are not very strong. So when I say that, what I mean is that in 2020, 2021, when we saw the global pandemic, the COVID-19 pandemic, it diverted a lot of export orders from Bangladesh and India to Pakistan. But unfortunately, Pakistan was not in a position to handle those orders, right? Because it did not have the capacity and the supply chain resilience to be able to do that. And I fear we are pretty much in the same situation. So, first, it's a question mark whether we will be positively impacted. And secondly, even if we were, it's unlikely that we'll be able to fully take advantage of that. Here, let me just remind everyone that there are two pieces of research that have come out in the last few weeks. One is from the Pakistan Business Council, which points to the fact that we could lose in net terms about $1 billion in our exports. And then the Pakistan Textile Council, which does more scenario sort of analysis, and it gives a range of potential loss to our exports anywhere between $1.3 billion to $4.5 billion, roughly in that range. So all in all, we are not really well positioned to take advantage. We're actually poorly positioned, and we will probably be absorbing some of the losses on the export side. The other thing that I think is something that I'm worried about that will play out is our high reliance on external capital and savings, and in an environment where financial conditions are going to tighten quite substantially. And then we have weak institutional arrangements to cater to all this, and I can talk about that a bit later. So I'll end here, and I can answer any specific questions going forward. Thank you.
Perfect. Thank you so much, Akusal. That was very concise, and it summarizes the overall situation top down from the global economy down to where Pakistan stands. A couple of observations that I had, correct me if I'm wrong. I think our largest trading partner in terms is the United States of America. Most of Pakistan's exports, which is textile predominantly, are to the United States. And interestingly, we're talking about the whole tariff regime. We're talking about goods only, not services. Of course, we uh, do import or buy a lot of services from US and US companies, but here we're talking about goods only. So we have a trade surplus in Pakistan's favor as far as that's concerned. As you rightly mentioned, what Pakistan Business Council and other export organizations are saying, Pakistan is going to probably lose out on that. So I have a small question on that. Our tariff right now, there's a pause for that, but Pakistan's tariff is a bit lesser than that of, say, Cambodia or Vietnam or say, Bangladesh or India. So would we not be a little competitive as far as that is concerned, at least for the time being? Just a short answer on that.
So Pakistan Business Council has, in their presentation, they have a fantastic slide where they've looked at that even despite the differential import tariffs, where Pakistan is at 29%, but others are higher, but the landed cost from those countries, because their productivity levels are so much higher, their cost advantage is much higher. So despite that, the only cost advantage that we get in terms of landed cost in the US is vis-a-vis China. That's it.
So this brings us to a very important question, which has impacted, and you also said that in your presentation. Also, you talk about protectionism and what Trump is trying to do, but that has incidentally affected the most sacrosanct segment, which is the bond market and the U.S. Treasury being the safest haven, if you may. So, are bond markets mispricing long-term geopolitical risk, which you mentioned also, or are we headed for a recalibration?
Look, I think the bond markets, as you know, are very savage and on the ball, as far as I'm concerned. Especially the deeper they are, and the U.S. bond markets are really liquid. So they resurrected a term that they'd used for Liz Truss, which was the moron premium. So I think they've resurrected that, and now they're calling that for Trump, President Trump, they've rolled this out. I think the bond markets will witness or demand a premium, a risk premium now to invest in the U.S. In U.S. paper, essentially.
Okay. Great. Now, we're moving on to Habib, with your perspective from an investor point of view in the multi-industry exposure that you already have, which includes energy, agriculture, and finance. So, what's going to be the impact of these tariffs on operational costs and cross-border flows and project financing? Shirani Saab did speak about the impact as far as external borrowing or funding or investing into Pakistan is concerned. But before that, I've just been reminded that we have to run a poll. So just holding this thought, can we run the poll now, Ikra? So yeah, poll number one is, which financial markets are you most exposed to? Options are equities, bonds, currencies, and all of the above. So, unfortunately or fortunately, the host and panelists cannot vote. So we can hold our thoughts and let's see what the participants pick out of this.
I think Kazmi sir, you should have mentioned gold here as well. Many people are piling into gold now.
That is true, actually. The prices have gone up. Yeah, yeah. Going back to the basics, that's true. So while we do this poll, read for you, the currency risk and credit implications and the global investments we talk about, that's the question that arises out of that is, how are private investors and conglomerates hedging against these risks brought by these tariff uncertainty? And a related question, given your exposure, especially in the energy and commodities market, what pricing trends are emerging at this point in time as we look forward to something happening?
You want me to answer now or wait? Are we waiting for the
We
poll?
can continue. Yeah. I'll announce the results now. So
Okay.
44% say equity, 21% say bonds, 32% say currency, and 25% say all of the above. Well, quite an interesting response, I must say. You agree, Shirani sir? One is gold as a commodity or whatever, but yeah, it's uh it's very close actually. It's that's so interesting to see. Very Abhi, please continue.
So,
Private
so,
invested conglomerates thinking and hedging risks.
so I mean, I think I need to divide that up into two parts because there is a way for Pakistani companies to hedge based on available, tools in the market, and there's a way for companies in other countries, such as in Pakistan. Unfortunately, you don't have long-term swaps available on currencies, which are available in other current countries. So that's one of the elements that companies internationally I'm looking at are doing. Taking a 2-year, 3-year swap from a currency perspective exposure. There's also obviously localization, which is primarily one of the goals of the Trump administration. So companies are looking at that element as well, whether it's shifting out of China to other countries where there's a lower tariff, or even looking to localize manufacturing wherever they can. It doesn't mean it's always going to work, but wherever they can to move it into the United States. And this is more prevalent in high value goods. For example, I've been an equity investor and primarily in the US markets for about 27 years. And I can tell you from in this last 1 month, I have companies which are blue chip Fortune 500 companies that are down 40%, 50%. And these are not like, small and medium enterprises. These are 10 plus $billion companies.
Too big to fail kind of companies.
Well, I mean, there's underlying proprietary IP. These are companies that have been in business for almost 100 years. And it's not that the underlying demand for their product has changed. Yet, because of just this, announcement, their market caps dropped by 30-40% overnight. Like, I mean, I can even name companies like Dell Computers, right? Hewlett-Packard Enterprises. Hewlett-Packard Enterprises makes some of the largest supercomputers in the world. Almost all of them have their chips in it and their servers. Yet, the company, I mean, Hewlett-Packard Enterprise went from $24 all the way down to 13. Now, is that logical? To me, it's not, right? I mean, and mind you, this is not one of those companies that to begin with was trading at a ridiculous price earnings multiple. Currently at like an 8 or 9 price earning multiple. That's like Karachi Stock Exchange multiples, for a really profitable tech company and US based with proprietary IP. So obviously there is going to be a shift, and that's going to take time. Companies are going to try to see based on their demands, based on their markets, how they're going to move. So that's the global perspective. Now for Pakistani companies, I think because we have to also look at the underlying basket. In Pakistan's case, primary exports to the United States or even to Europe, our largest single export ends up being textile. Now, while there's an opportunity in the United States to take some of the market share from countries like Vietnam and China, because those two in aggregate contribute about 30% of US textiles, it'll also put pressure on the European markets where Pakistan is exporting, because when there is these tariffs on the US side, that excess capacity that these countries have is going to be shifted towards other markets where they can provide. And I mean, as an example, if you think about Pakistan and how many people from your blue collar perspective are employed by the textile industry, imagine countries like China and Vietnam, which have a far larger textile base, how many millions of employees are at risk. They're not going to just sit around, right? So they're going to do whatever they can. So we need to also not just look at our opportunity, we need to also understand what other countries that are impacted, like, Pakistan Business Council has said that our impact would be 1.5 to 4.5, great. But what is the impact of the countries that we compete with in those other markets that we're in? And how are those countries also looking at this? Because we need to understand that to be able to come out with a policy, and also from whether it's on a business level or on a country specific level, how are we going to mitigate these challenges and risks? Another element to look at is also, I mean, you can blame the IMF. I personally think it's a matter of negotiation. You also have to be more competitive. So, the US, for example, is saying we need to balance out trade. That's their primary contention in all of this, that they want the trade balance of goods to be more or less at an equilibrium. Now, a country like Pakistan, when you look at our tax rates, and especially now that has been done in the last budget, that you've increased the tax rate to 35% on exports. I'll be honest, I mean, I have one business which is doing exports, and I do think that, if I can make a holding company in the US and make that company the buyer of my goods to supply to the US and just hold my profits over there at a lower tax rate, why do I need to bring my profits into Pakistan? And the reason I bring this up is because what it does, it offsets your actual equilibrium. Whereas the actual value of those goods at sale is much higher, but there's an intermediary that may be owned by a manufacturer in another jurisdiction where they're moving the profitability over there, thereby reducing the trade balance. So, you need to be realistic in terms of your taxes also to these industries to, one, incentivize them to maximize the amount of money they're bringing back into the country. And this has been ongoing. I can't quantify in an absolute term how much the value of it is. Some companies are doing it out of the Middle East. There's transshipment out of Dubai. Some are doing it out of Europe. Some are doing it out of the US. So you have to look at it holistically to understand why is it and address the root cause of it. And these are some of the things we can do. And I think that's what companies are doing. That's some ways for them to mitigate the impact of these tariffs as well.
Okay. If I can just add, Kazmi Sahab here.
Sure.
I think one other thing as at a country level that we need to be doing, and we've not been doing it for a long period of time. The reason our export to GDP ratio is only about 8-9% or less than 10%, there are two major factors. Of course, we can talk about policy inconsistency and political instability, but the two major factors for a long period of time: an overvalued exchange rate. Somehow we are just married to this concept, and two, the tax regime, which Habib spoke about, which is so anti-business and anti-investment and anti-growth in Pakistan. So now in this period, I mentioned competitive devaluations of currencies, very likely to happen. Pakistan needs to be much more flexible with its exchange rate and just ditch this concept of being wedded to an overvalued exchange rate or a stable exchange rate. It is not going to work because we have so many factors which are adding to an unproductive or less productive export sector. The only way we can give them a prop is two things: one, a competitive exchange rate, and two, get this monkey off their back of the the tax regime, the new taxes, additional taxes that we've imposed on them.
You very well
may I
described
add one
that.
thing
Yeah.
with regards to the exchange rate? So while our overall markets, even televisions, they primarily are focused on US dollar PKR exchange rate. But if you notice over the last 1 month, the dollar index has gone from around 110 to somewhere between 98.
Yeah, the cross currencies are acting. Yeah.
So all the other currencies that Pakistan's export base is towards have already gone through, the rupee has gone through a 10% deval against all currencies except the dollar, because we've been holding this peg on the US dollar. But if you look at the euro, if you look at the pound, you've actually had about a 10% deval, against those currencies. Now, obviously, this is short term, and the anticipation is that within 3 to 6 months, maybe up to 12 months, dollar index will go back to about 104, 105. In the short term, this is good also for the United States because it's making their exports cheaper. But as other countries catch up and they will devalue their currencies, definitely Pakistan will have to play this into that as well, because countries are not just going to sit idle and just say, okay, everything, leave it as is. And for Pakistan, one of the other things we can add, because it's also a matter of what your labor force is trained in and what do you have available in terms of manufacturing that you can immediately take advantage of this. Primarily, whether it's good or bad, the reality is that textile happens to be one of the largest elements where we do have a little bit of excess capacity. And more importantly, we have the trained skill sets that are needed. So, for example, we do already import, the single largest import from the US right now is cotton. Right? A case could be made to the US government that, listen, we will bring in more cotton and we do it in a way where it is going to be tracked and traced so that you bring USA organic cotton, it is manufactured in Pakistan for re-export back to the USA. That way, there's an underlying agricultural commodity which USA is prominently wanting to export, and it gets manufactured into a good which is re-exported to the US. That's where you can add value for our textile sector, because you're basically taking an underlying USA product, adding value to it, and re-exporting
Habib,
it.
that's absolutely brilliant thing that you have mentioned. Of course, that is what US is looking for, and I think this is going to come up in the bilateral negotiations that Pakistan is going to have on tariffs. That would just boost their exports of raw materials, something, and whatever any country is best at. इसमें मैं एक बात यहाँ पे मेंशन करना चाहूँगा, बहुत अच्छा पॉइंट आप दोनों ने रेज किया एंड शिरानी साहब स्पेशली, कि पाकिस्तान की competitiveness है क्या अभी. So there are four components as a layman and has been a banker for the past 30 years or so. First of all, there's capital. So the cost of capital locally and from abroad is very high. Land is very expensive in Pakistan. Power is very expensive, even as compared to other neighboring countries and exporters worldwide. And then you come to labor. So probably the only cheapest component is labor, which you rightly mentioned, Habib, and you're in the business, you know that. We get unskilled workers, most of them. So, we can deploy them in textile and some other places, but semi-skilled and highly skilled either go outside or are not part of this. They do their own small business. So looking inward, हमें अपनी capital की price और cost भी थोड़ी सी कम करनी पड़ेगी. It may be directed credits. There may be a lot of treasury people sitting here and watching this, I'm sure. So that brings us to the point कि banks mostly lend to the government. It's the safe haven. मैंने PIB और T-bill में पैसे लगाए हुए, मुझे market में credit देने की जरूरत नहीं है. We've all seen the numbers there, the IDR जो ratios होते हैं banks के, they're out of group, 80-90% invested into. जो कि अब सारे वो कम हो रहे हैं. Point is, we have to look inward. आपसे दोनों से gentlemen से जो बात हो रही थी before the session also, taxation policy, some of the structural measures, which includes power, the cost of power, which is dovetail with that our electricity is produced locally, but energy cost to हमारी imported ही है. The oil, the furnace oil, the gas is mostly imported. So उसमें शिरानी साहब आपका पॉइंट बिल्कुल सही था, devaluation and what not. So हमें अपनी exportable surplus और potential बढ़ानी पड़ेगी to counter the imports. Otherwise, अगर हम 30 अरब 35 अरब की एक्सपोर्ट करते हैं और हम 100 अरब की इंपोर्ट करते हैं, उस 100 अरब में से 55 अरब प्रॉब्ली ऑयल और पाम ऑयल ही है, और गैस एनर्जी रिसोर्सेज. तो अगर हम उसको इतनी वैल्यू ऐड कर पाए कि हम उसको नॉक ऑफ कर पाए, अदरवाइज $1 इधर रुपी डिवैल्यू होगा तो वहां पे हमारी इंपोर्ट्स भी तो महंगी हो जाएगी. सो इट्स गोइंग टू क्रिएट अ बिगर trade deficit for us. So that is one of the reasons why probably government intervention or whatever, not to devalue rupee that much, comes in, just to balance that. But point taken, it should be left to the market to decide, and we should increase our competitiveness that way. So very important things that have come out in that. Let's move on to the third segment for about 10 minutes. It's going to be a more interactive session, and I'll ask both of you the questions. So the US imposes sweeping tariffs to China tech hardware industries. China's retaliates with restriction of rare earth exports. That's one of the big thing happening throughout Pakistan, throughout the country, throughout the world, and Pakistan. And again, Habib, you would know you're into mining and all that. Also, how important those materials are, especially for the tech industries, and now with the EVs and all that. So global equities, जैसे आपने जिक्र किया, you are an investor yourself. They've about 7% overall in Dow and other places, and US dollar has weakened. So what is your forecast? What does your forecast model, जो आप intern करे, tell us about the short-term and mid-term shocks in this scenario that we are looking at? Pause or no pause going forward?
So look, I mean, I think when it comes to tech and rare minerals, when it's minerals, में देखें two major चीजें आ जाती हैं. There's basket of rare earths, but the underlying things that they're servicing is, one is batteries, and the second is magnets. So these are the microchips में तो magnets आ जाएगा ना, because every smartphone उसके अंदर I think 8 से 10 magnets हैं.
That's
And
right. That's
the rare earths का जो major use है वो magnets के लिए है, ठीक है? तो because you can't make most of these technological devices without it. Having said that, when it comes to the manufacturing element, जिसमें microchips आ जाता है, even phones आ जाता है, other things like high value technological goods. You know, I'm sure you guys have, well, at least your audience probably also has seen, there was a video circulating a couple of weeks ago about a dark factory in China, automobile factory, which no electricity, no lights on, no humans, and everyone was very impressed to see it. And I've often asked this question, Kiji, if this can be done in China or, any other country for that matter, what's stopping the United States from doing this, given that they are the buying market? And that's very, very important. Like one element that, while we all talk about GDP, an element that for some reason I feel people tend to miss out on is per capita GDP, and not taking into account purchasing power parity, because I'm sorry, while that is a measure, I personally don't agree to it, because, if I have to take a flight, or if I have to buy a car, or if I have to buy an iPhone, really that purchasing power parity is not going to help me, right? So when you're talking about technological goods, or you're talking about mobility goods and things like that, the purchasing power parity does not factor. What factors is your ability to afford those things, which is driven by your GDP per capita. So for technology, I do see that a lot of the manufacturing, especially for goods that the end market is the USA, are going to be moving there, especially goods where you don't have a labor component, where you have a robotic automated component, because that can be done anywhere, right? 61 million iPhones being imported into the United States. The solution is not for those mobile phones to be moved in manufacturing from China to India. The solution is for them to take it into the USA and not manufacture 61 million, maybe manufacture 100 million, so that from there they can supply a net export into other markets as well, thereby bringing their cost of production down.
If I can interject here, that's a
Sure.
very important point, and that is one of the reasons why Trump is doing that in the first place, to bring back the jobs. And some people argue those are menial jobs, or auto industry or whatever, and putting screws in an iPhone and whatnot. Is it not going to take a lot of capital and time to do that? So instead of just slapping tariffs across the world, should he have out of the first, of the 1,400 days, the first 100 days, he's created this international turmoil. So would that not have been better, that he would have worked inwards, as we were talking about internally, अपनी capacity or capability बढ़ा के फिर वो करने? And there's another component जो आप बिल्कुल सही कह रहे हैं, अगर manufacturing ability, capability, capacity बढ़ा भी ली robotics use करके और unmanned or whatever, उससे आप jobs नहीं create करें, जो कि एक intention है उनका. अगर robots नहीं करना है, jobs तो नहीं create होंगी. दूसरा, उसके जो raw materials है वो तो फिर भी imported ही होंगे ना. So that was the small thing that I wanted to ask.
So देखें, I actually see President Trump's, and I've been following him. One of the first books I read in college was The Art of the Deal. And I've known his nephew since 1998. So I'm well familiar with some of his policies. In fact, I learned about real estate and construction through The Art of the Deal, floor aspect ratios and all that. He's always believed in shocking the system, because unfortunately, big business does not necessarily listen otherwise. I think there will be a negotiation, and they will give companies time. The objective of doing this is come and pay respect, so to speak, right? You turn up, you do a deal with me, and yes, I will agree to it and I will give you that time, but you better be doing it. Otherwise, these tariffs can go into effect retroactively as well. So, for example, Apple announcing that we are going to put 500 billion in manufacturing in the US. Nvidia announcing a similar thing. I think SoftBank announced 100 billion. A couple of UAE, I think, 1 trillion, so on and so forth. It's all interlinked, right? It comes down to the buying power. And that's why it is very difficult for countries. Like, for example, if we have to say as Pakistan, look, we have a 2.5 billion, 3 billion deficit with the United States for trade, what can we buy? It's a really difficult thing to come up with. Why? Because sadly, the buying power of Pakistanis, the average Pakistani, is not that high. So you're very limited on choice as to what you can bring in that would sell over here. So what are you going to find? You're going to find soybean, because you have the sixth largest cattle or livestock, and actually livestock is one of the few sectors that did well in the last 1 year. I think growth is about 24%. So you have that available. You could have products which are made in USA where you can value add and send them back. But if you needed products to supply into the Pakistan market from a large scale consumer perspective, very limited. So that is the same problem most countries are facing. USA's buying power is what makes it unique. Otherwise, and that they know, that is exactly what President Trump is taking advantage of, that at $90,000 per capita GDP, they know that that is a significant strength, and that strength is not USA, it is the consumer of the USA that is their strength.
That's the purchasing power of
Can
the
I
United
sort of,
States, and that. Saqib,
yeah,
actually, I
Kazmi,
was coming to the same question to you. Actually, please.
yeah, but because obviously I have some strong thoughts on what President Trump is trying to do. I
Yes,
think
yes.
first, obviously, he's obviously not read any book on economics, but it seems unfortunately neither have his advisors,
Yeah.
because they're throwing out 250 years of comparative advantage theory. There's a reason why America is not producing smartphones. There is a reason why America is not producing so many other things which China has been producing. And there's a reason
Absolutely.
why those things have migrated from China to Vietnam now, and to Indonesia, and partly to India, right? So I think this is a monumental exercise that will end up in failure. And I'll give you an example. I was listening to the head of a US auto firm, and he was saying, look, we do not have the supply chains to start producing things in the US, right? They come, there are about 170 different border crossings that take place for many of our parts. They come from Germany, they come from Mexico, they go to Canada. From Canada, they go
Yeah.
to one factory in the US,
Yeah.
then back to Mexico and back to another factory. China, there's a reason, and I think there was Tim Cook saying this a few months ago, that in a video that went viral. The reason that they produced in China is because you could find the density of those networks of
Correct.
supply chains. You could get the raw materials, you could get the intermediate products, you could get the talent pools, the depth of the talent pool. He spoke about the lathing machines and the lathe
Yeah.
operators that you can't find anywhere else, not
Saqib,
even in the
only for the
US.
iPhones, there are 100 companies in the same vicinity doing one thing or the other, as was mentioned
Exactly.
earlier.
So I'm
Right.
not I'm not really convinced that the US can reshore, the way that they think that they can. There's going to be a huge problem with their strategy.
Uh, Habib, just a very quick question on giving you exposure and experience in energy and commodities. We spoke about it a little bit. What pricing trends are emerging? Are these things going to be more expensive for other rest of the part of the world, or what?
I think definitely they can, irrespective, even if you take the
देखिए
baseline.
इसलिए कि कनाडा से एनर्जी तो यूएस लेता है तो उनके लिए इंटरनल for the US internal market as well as for the global trade in terms of energy and
Well, I
yeah.
mean, obviously, at the same time, I'm a shareholder in GE Verona, which is, an offshoot of GE, and the GE Verona share price has gone from 134 to, I mean, it had gone up to 400 plus, but now it's like 370, because they're signing all the nuclear plants. They're signing, it's one of the largest energy companies in the US, which is getting the contracts and has the licensing to even put up nuclear plants. So they are looking at offsetting that energy that is coming from Canada. How long it will take is debatable, obviously.
That's right.
And the advantage the USA or companies in the USA have, which I feel a lot of the world does not have, is access to cheap capital. Even right now, if you look at their rates, 6% ish, you can get long-term debt. They have a very, very big bond market, even for corporate debt, which actually hedges them from these kind of shocks. Because, I have a manufacturing concern in Pakistan. If I need running finance, the only option, frankly, I have to go to a bank and take a 1 year line of credit. And that's completely not hedged to any shocks, which is no fault of mine, right? The USA companies, like big companies, Apple can do $50 billion and put it into a placement in bonds on a 5-year bond or a 10-year bond, and they know what they have to pay out for the next 5 years, and it's okay. They also know what the principal amount is that they have to allocate and pay out at the end of those 5 years. So, their access to their capital markets, and that makes their companies, it gives their companies the ability to be able to take those decisions of high levels of capital allocation and growth, which a lot of companies in the rest of the world are not able to. Europe is a close second, of course. And this is something I feel that in Pakistan also we need to do. I mean, create the bond markets. And
I think this is probably it is the right and the best forum to discuss this, with FMA being our host and partner here. So we need to expand that. So my question to you related to this, Saqib Saab, is कि Habib has rightly mentioned कि भी हमारे पास बहुत कम sources और resources हैं. हम banks के पास जाएंगे या हम capital markets के पास जाएंगे. So the sizes of the company, there's a whole talk about a post-Second World War, what happened with Japan and Germany is the SME revolution. उन्होंने छोटी companies बनाई थी जो कि आगे जाके आज इतनी बड़ी companies बन गई and all that. So they all needed, or again, वो pooling नहीं, हमारे पास we require more structures. We need newer products, both Islamic and conventional, if I may, because that is one of the priorities that a lot of investors locally are looking for. There is not enough avenues. So while we talk about the structural reforms coming in overall in so within the banking sector and the asset management and the capital markets, what do you say to that?
I think आपकी बात बिल्कुल सही है, and I mean, I skipped a few slides, and one of the slides was what Pakistan can do or what it needs to do. So obviously, and not just short-run knee-jerk reactions. For example, sort of negotiating with the US or competitive devaluations, but structural reforms, man.
Right.
And obviously, I think Habib is absolutely right. ये जितनी हमारी lack of depth है capital markets में, bond markets में, हमारी overall financial markets में, it's stunning. Even when you look at the bank credit to GDP ratio, you look at the number of people that have access to credit in Pakistan, it's just abysmal, even within the South Asia context. So that's one thing. The other thing, obviously, we need to do is build our capacity in terms of border control, in terms of anti-dumping, because Habib mentioned this very rightly. This is what China is going to do now. Obviously,
Yeah.
China is going to divert from the US, to European Union, to any market it can find, including smaller markets like Pakistan. So we need to build up a capacity for to handle anti-dumping as well. Customs, border controls, all these things are structural reforms that we've not really built upon. And I just like to emphasize once again, हमने productivity की बात की, इतनी बड़ी बात है because आपने mention किया कि we are a low wage country. Actually, it's not entirely correct, because when you factor in productivity and you look at unit labor costs, Pakistani productivity is 1/7 roughly of Vietnam. It's 1/5 of China. It's 1/3 and 1/4 of India. So जितनी हमारी low wage जो advantage है ना, वो सारी wipe out हो जाती when you look at it
Efficiencies
in
are offset
terms
to that.
of
Absolutely.
unit labor costs.
Inefficiencies. Yeah.
Yeah.
You're absolutely right. I think this is time for another poll. Ikra, if we may have the third poll on the screen. There you go. What would your trading strategy look like? Option one is no change to strategy. Number two, switch to precious metals and commodities, as Akib was mentioning about gold. Number third is short US bonds. Habib, this is for you. Four, buy cryptos. And five, diversify other G7 currencies. There's another question. Is your assessment in this single choice short-term issues, less than 3 months, medium-term 3 to 12 months? And how will a long-lasting impact more than 12 months? We'll wait for the participants to vote on this. What would your trading strategy look like? No change. Switch to precious metals, commodities, short US bonds, buy cryptos, or diversify into other G7 currencies. Let's see what the answer to that is. Okay, so predominantly 68% of the people have said switch to precious metals and commodities. Saqib साहब ये वही वाली बात है जो आप शुरू में बोल रहे थे. And gold has gone up because of that. And next to that is buy cryptos, that's 20%, diversify other G7 currencies. We were mentioning about that, so 20%. And 33% are looking at 3 to 12 months for that. So very interesting. And I'm really delighted that our participants have a very good eye on these issues. So just moving towards concluding this, there are very important aspects that we have spoken about this. The inability or the lack of right structures or markets available within Pakistan for companies to raise capital, even for short term. Jaise Habib ne zikr kiya, we need more structures, we need more products. On the other hand, as Saqib Saab has mentioned, even for the labor, we need to improve efficiency. Now, what I personally believe is that कि हमारे पास ज्यादातर बात होती है while we know something, let's talk about corruption and all that. Corruption से ज्यादा बड़ा मसला हमारे पास inefficiency है. Inefficiency and lack of decision making at the right time. I think that those two are the bigger issues, and there are various reasons for that. The Saqib Saab is the most senior among all of us here, and he's worked with the government also, so you would know क्या फर्क पड़ता है स्टेटस को, क्यों मैं ये साइन करूं, दैट काइंड ऑफ थिंग्स. उसमें पॉलिसी डिसीजंस एट द राइट टाइम नहीं हो सकते. अगली आने वाली हुकूमत है वो करेगी या दूसरा सेक्रेटरी आएगा वो करेगा, मैं नहीं कर रहा. तो यू मस्ट हैव सीन दैट. एंड अगेन, अगर आपने कोई एडवाइस दी वो फॉलो हो गई और उसका नेगेटिव इफेक्ट हो गया, तो फिर वो सारी चीज आपके ऊपर आएगी. सो दोज आर रियल इश्यूज विद इन पाकिस्तान. लेट्स लुक इनवर्ड, and then we would be in a position to make those changes which are going to have a meaningful impact that would result in a sustainable growth for Pakistan. Correct me if I'm wrong, sir, in these two, three aspects, both of you, to summarize.
No, no, you're absolutely correct. There's a huge unaddressed structural reform agenda, and when I say structural reforms, हम cliche बन गया, but I add institutional reform agenda as well. To be honest, we don't talk about that enough, but हमें बहुत सख्त rewiring की ज़रूरत है as a polity, as a governance structure or a governance unit. So I think it's both structural reforms and institutional reforms that we need to do. And we've listed that tax reforms, yeah, labor market reforms, factor market reforms, yeah, whatever product market reforms. A lot of these issues we've spoken about, Habib has also mentioned. But unfortunately, lag nahi raha hai ki we understand the gravity of the events around us. We're still in a reactive mode. We're still in a short-term myopic sort of mode. And I think we need to think strategically, but unfortunately, that may be, just wishful thinking.
Habib, your thought on this?
I think it's a way to address some of these things, because clearly whatever we are doing across multiple governments, across multiple decades, I mean, the result is in front of us. So it's not about blaming any one individual or government. And we all want to see Pakistan thrive. We want to see our people, our citizens have that upwards mobility, that growth, and so that our country does better, we do better, everyone. Even and for me as a manufacturer, I say, the better the people are doing, the more buyers I have, right? So it's a win-win. A way that it could be addressed is by, rather than giving these kind of जो normal होता है कि जी आप subsidies दे देते हैं, etc., you need to incentivize and create those incentive models which are linked to, let's say, productivity enhancements. So let's say if you are doing a 2%, 3% enhancement in productivity measured by an independent, right, we'll give you a tax break. Because that is going to incentivize everyone else to move towards that, right? Not going to give you a tax break just because you're producing a particular product, but you need to have a roadmap towards enhancement of productivity, value addition. And let's say if you're at tier 3 of the value and you come to tier 2, okay, we will give you a tax break because we now understand that the value of those goods going out is a higher, which means more exports, right? So you have to create those kind of incentive models rather than the types that have always been given, which are very basic. ये export refinance
जी,
दे
वो
दें हमें,
ब्लैंकेट वाले जो होते हैं उसकी जगह टाइम बाउंड एंड क्वांटिफाइबल। आपने बोला कि
quantifiable।
हबीब साहब
जी
आप इतना एक्सपोर्ट अगर बढ़ाएंगे एंड ऑल दैट,
जी
जब आप ये कर
जी
पाएंगे और नंबर्स दिखाएंगे और पैसे बाहर नहीं होल्ड करेंगे, सारे पैसे
बिल्कुल।
यहाँ ले आएंगे जो आपने जिक्र
उसके भी
किया।
I have plans in my head of how to again incentivize people to bring money into the country in a fair way, right? Look, I mean, at the end of the day, you have to be fair to your people. It's all a matter of fairness. If you're not fair and the advantage of the hard work and labor of one party is being given to somebody else, no one is going to participate. It's a very basic human functioning कि जी अगर मेरे मेहनत का सिला किसी और को मिलेगा,
That's correct.
मैं आपके साथ क्यों शेयर करूंगा? सबसे हाँ, पहले मुझे दें, उसके आगे अगर कोई एक्स्ट्रा है, by all means share it with that
Equitable distribution,
equitable.
बिल्कुल।
Yes, but
So
if I get
it is
nothing out of it and someone else is getting all of it, no one is going to be happy with that.
okay. So while we move to conclusion, we have 4 or 5 minutes now. There are some questions coming from the audiences also. मैं आप दोनों से quickly पूछना चाहूंगा। पहला सवाल ये है, with the current situation, how do you expect IT exports to be affected? Because अभी तो tariff goods के ऊपर ही है, although not directly but indirectly due to decrease in demand. ये एक सवाल है। So quickly पहले हबीब आप और फिर साकिब साहब।
So as you know, I'm also in the fintech space. I've had 2 startups. IT में, frankly, the bigger problem than the tariffs is actually AI, which, if you think about and the impact that it's going to have, as Bill Gates is saying, and all the other global experts are saying that most of your coding people are not going to be needed a couple of years down the line. So this is something we need to start already as a country, which has the second or third highest number of freelancers. You need to start thinking about these things, because what are these kids going to do 2 to 3 years down the line if evolution of technology happens the way it is? Governor Saab in Sindh is training all these IT kids, and he's doing a great job at it. But do we have a long-term strategy towards being able to address this? Tariff-related demand and supply is a event-driven thing. Long-term, it's not tariffs. It's going to be technological innovation and advancements that you have to take into account as a country, right? Countries aren't supposed to be driven by just a single event. They're supposed to be, your policy and
So अभी
planning
कोई
has to
इतना
be.
ज़्यादा effect नहीं होगा in medium to long term. Same question to you, Saqib Saab, quickly. How do you see this affecting the IT exports?
I really don't have a view. I'll just defer to what Habib says because that's his space, not mine.
So then we move on to the next question, which I will direct to you first. What role can Pakistan's government play in insulating the local economy from global trade shocks? We have discussed that, but just to summarize, I think that's a very good
Right.
question.
अच्छा, the मजे की बात है कि you don't expect this, but if you track Pakistan's economy, I mean, if you map Pakistan's economy with the US economy, GDP growth basis पे, you'll find something really interesting, which is that both of us are not that open economies. Even the US is not a very large externally oriented economy, and Pakistan तो कहीं से भी नहीं है. Despite that, हमारी काफी strong correlation है US की GDP growth के साथ, which is really bizarre. You'd expect China to be much strongly correlated. EU, उनके linkages बहुत strong है. So वो कहते हैं ना कि when the US sneezes, the rest of the world catches a cold. Pakistan certainly catches a cold. So we will be impacted by what happens in the US just by past structures and patterns of our economic, linkages, bizarre as it may sound. What can we do? I think 2-3 चीज़ें हैं, जैसे हमने बात की कि थोड़ा सा हम स्पेस अपने लिए क्रिएट कर सकते हैं competitive devaluation से, टैक्स साइड के ऊपर. दूसरा, हम we don't have to increase our import bill just to satisfy the US. We can look at be a bit more smart about it and see trade diversion. So there may be things that we're actually getting from China that we can route to the US. It may be more expensive for our consumers, but at least import bill itna nahi badega. And then there's something which is just completely not my field, but I think एक चीज हमें करने की जरूरत पड़ेगी as we think about these things. Increasingly, we'll be asked to either you're with us or not with us. It's
Yeah.
that sort of world now. And I think to create that wiggle space between China and the US, I think there's something that Pakistan needs to do on the diplomatic front. और वो ये है कि टर्की के साथ, ब्राज़ील के साथ, साउथ अफ्रीका के साथ, मलेशिया के साथ, सऊदी अरेबिया, कतर के साथ मिलके we may need to revive the non-aligned movement and play a role in that. So that will actually then sort of create that wiggle space, wiggle room for us, where we can tell the US कि यार हम आपके साथ भी हैं और चाइना के साथ भी हैं और ना इधर है ना उधर है, non-aligned movement को we need to work on that. I'm not sure we have that smarts, sort of with us or not, but this is something we can do.
That's perfect. So with this, the last thing that is required by the sponsors is before we say thank you to both of you is to have a group photo, and this is going to be a screenshot of this. So let's pose for that. Ikra, we are ready. So take a photo, and then we will thank our participants and attendants. So thank you, everyone. And it's been a pleasure and an honor, Saqib Saab and Habib, for this engaging and very frank discussion. We have touched upon various aspects within this tariff turmoil situation, both inward looking and outside, and de-risking and hedging ourselves for whatever instruments and possibilities that we have available for short term, medium term, and long term. And I thank you again. And I would also like to thank FMA and Tresmark for providing us this opportunity to sit together. And thanks to technology, we're able to reach a much larger audience while sitting like this. So we hope to see both of you and others for other interesting subjects going forward. And thank you to all the attendants, and my big shout out to Komal and Ikra and the team, which has made this possible. So thank you so much,
Thank you.
everyone.
Thank you,
Shukriya.
everyone. Love this.